Welcome to Trade of the Week with me, Ntauleng Lechela. This week, Sasol, Anglogold Ashanti and a few offshore uranium picks are up for analysis. Herenya Capital's Petri Redelinghuys joins us now for that assessment. Petri, thanks so much for your time yet again this week. Let's start with Sasol, right? I know it's the first month of the year, but we've seen major swings in its share price, making big gains on the back of geopolitical risks when we saw the oil price tick higher. Just last week, we saw it plunge on the back of that JP Morgan downgrade. I think the last time I checked, it was trading below 100 Rand. Take us through what the charts are saying.
So I'm glad that you mentioned all the news items, because there's obviously an enormous amount of inherent risk at this stage. It's no secret that Sasol is one of the stocks that we've been very bullish on for a very long time. I think regular viewers of the show will know that we've been punting Sasol for a long time. So what's interesting here is just we have an opportunity to get on board with what we think is a longer term trend change. So if we look at this chart, now this might be a little messy, so please forgive. But let's do that. So this is a longer term daily chart, all right? So there's a lot of stuff drawn on here and I don't want to take it off, so please forgive me. But we have essentially what's a very long term downtrend. And then a break of that downtrend as it breaks out here and a bit of a consolidation before we think this trend continues higher. So for the sake of illustration, I'm going to make this line quite a bit thicker, right? This is the 200-day moving average. So let's just make that a little thicker, right?
Yeah.
So it's easier to see. So this 200-day moving average is a very nice sort of indicator of what the overall long-term trend is in the stock. So the more data we load here, the more we can see that this trend line really works very nicely to indicate longer-term trends, right? So what sometimes happens with this trend line, well, with trend lines in particular, is that you have these sort of periods of consolidation around them. What we think is happening here now is we've got this downtrend that's broken. So this long downtrend that's broken, we managed to break out of this downtrend as indicated by our sort of white trend line that's been broken here. And then we broke up above this 200-day moving average and spent a little bit of time around it. And we started sort of this move higher, right? So here is a significant high. We've made new significant highs, and we've made some higher lows as well. So that can say to us that from a trend perspective, it looks like the trend is on the up. We have this downtrend that's been broken as well, so that's a potential trend change. And we see that price has moved above the 200-day moving average. So yes, there was now some bad news that has acted as a catalyst to get the stock to really kind of plunge, I think was the right word that you used, probably the right one. But that's kind of ran it all the way down into what we've got as a little yellow line over here, which is around 94. This has been a previous historic support and resistance level. And it also coincides with, it's not exactly 100%, but it coincides with that 200-day moving average. So essentially, prices came down, slammed into that 200-day moving average, as well as what we think is a sort of relatively significant support level, right? So this provides an opportunity, at least in the short term, to buy the stock, to trade essentially the bounce back up, right? Our view is that the longer term trend is intact here from a long-term trend perspective, that the share should over the next few years continue to trade higher. Sorry, I switched to a weekly chart there. So over the next few years, the share should continue to trade higher. We're bullish on energy prices. We'll get into that. Uranium is obviously a big theme for us that we've been punting for a long time now as well. So we'll look at some options in that space. But the energy complex in general, this is still a very good access point into that, as well as other chemicals that they do as well. And we think that this is potentially just a good opportunity for trend following traders who are happy to be in it for the longer term to get a decent entry point into a stock that we think is going to trend for a long time.
I see that you hold a bullish view, a more long-term view when it comes to Sasol. And it's been interesting to hear from various analysts around how Sasol is one for an investor with a more riskier appetite, and maybe perhaps it's more of a trading stock. Just your sentiments around that.
I think that's interesting because, I don't know. I think that, it is one of our bigger holdings. So full disclosure, in our managed clients' portfolios, it is one of our bigger holdings. And we have been buyers over the last 2 days as the share has plummeted, and that's been an opportunity for us to take. And yes, I suppose, considering that we are running actively managed equity portfolios, those are generally higher risk portfolios, right? And we seek higher returns because of that. So yeah, to an extent, I think that it is a fair assessment to say that it is a higher risk stock for investors with higher risk appetite. But at the same time, I think that view on how much risk something is also quite cyclical. Because you know, when the stock is back at sort of 300 Rand a share, then it's not going to be a high risk share for you know, riskier investors. It's really generally when the market's quite an emotional thing. So when opportunities are really good, emotions are really high. So the thing that scares you is often the thing that you should be doing. And I'm not saying, you know, go out and gamble on everything that scares you. It's definitely terrible advice. That's not what I'm saying at all. I'm just saying that often when opportunities are present, people are filled with fear. And then you hear things like, oh, well, you know, it's a trading stock. It's not something that you can hold for the next 10 years. It's really for higher risk stuff. Let me tell you, the clients that we have that have made massive money in the markets over the last 20 years or over the last, you know, longer than my career has been around, or even in the last 10 years that our business has been around, those guys are risk takers, right? They were the ones that were buying Sasol at 25 and 30 when everyone thought that it was dead and no one was going to ever use oil again in the middle of COVID. And you know,
look at where we are now.
Made an enormous amount of money doing that, and that was for the riskier guys, right? So, yes, equity investment isn't necessarily low-risk business. You can go into diversified equity funds for that if you want. But for those who are keen to, you know, take a stock that is a very good business that's probably going to be around for the next 100 years. It's already been around for, you know, essentially forever. And we think that, you know, if the general energy complex is going to continue to do well, it's a solid business that's going to be around for a long time. It's an attractive entry point. Under $100, in 2 or 3 years from now, you're going to go, wow, I managed to buy Sasol under 100 Rand.
And you know, we could say the same for those gold counters that we are seeing rallying at the moment.
Because last year or 2 years ago, everybody said, oh, gold is a trading stock. It's definitely not. And now they're up 5-6 times from where they were 2-3 years ago. And now everybody's, oh, I'm an investor in gold.
Exactly.
Where's the trading stock now? You know, now you should be selling this. Well, ironically, we're still quite keen to buy it. We'll get to that next, I think.
Let's get right into that, right? Last week you chose, was it Goldfields?
It was Goldfields. It was I kind of alluded to the whole, actually, can we quickly just segue to that? So some of the things from last week. So one of the trades from last week was Naspers. So that has stopped out. So I think if we show this little thing here, I'll just copy that line down there. That was essentially our trade, that little break out of that range. So we had this closing price, this close above this little trading range that it had been in, and that was the signal to go long. Also, there was some stochastics and stuff involved in that decision as well. And then, you know, as Murphy would have it, bleh, it just absolutely melted. So the stop loss was below this little support level here. So that has stopped out. But the rest of the trades are doing relatively well. Goldfields was one of the trades that we looked at. That's kind of breaking to all-time highs now. Well, not all-time highs, but new highs. Naspers is out. British American Tobacco was one. We were sort of buying off of the support level. That's bounced quite nicely. And then Valterra, again, this was more like a platinum sector play. Because we mentioned Impala and a couple of others as well. And this is also sort of trending up. So Anglo Gold, I guess, today is just a reiteration of that. Precious metals, look at platinum, look at silver, look at gold. There's a lot of additional risk coming to the surface in markets. For example, we saw Japanese bond yields go above 4% for the first time, like, well, I think since the 70s or whatever it was. So that indicates that the market's becoming a huge amount more risky. So people might want to flock to gold. I don't even know if I want to mention this. On Saturday, the Times newspaper in the UK actually said that banks should prepare themselves in case people freak out because it's disclosed that aliens are real. So I don't know, make with that what you want. I promise you, I promise you. So people are scared by gold, right?
I mean, you know, it's not as crazy as President Trump trying to get a Nobel Peace Prize. So, you know what, I'll take it.
We'll easier believe that aliens are real than Trump deserves a Peace Prize. That's amazing.
All right, let's get into Anglo Gold then. Do you want to go through the graph?
So Anglo Gold is just a solidly trending up stock. It's breaking to new highs here. And it's backed by essentially the gold price also that's reached record highs this morning as well. So it seems as though for now the sky's the limit. Now, there's a couple of different ways of thinking about this, like don't chase is something that people often say. Don't chase the stock, wait for a good opportunity. Absolutely, yes, that is golden advice. But if we look at this stock, for example, and we spoke about this last week, it has broken out of that resistance level. That's a buy signal. So yes, we are quote unquote chasing the stock, but there's no real resistance. We're in completely uncharted territory. We're running off a market dynamic that is very much the news flow around gold and silver is that central banks are just buying it all up. Some are getting squeezed out. There's a lot of sort of conflicting stories. Nobody really knows what's going on. This is all just fueling this like indecision and indecisive and a bit of fear in the market. And that's just sort of really pumping the gold price. So dance close to the door, have a stop loss, use a 2-day trailing stop loss or whatever the case. If you don't know what that is, email us, we'll explain it to you, no problem. But this is something that we think has probably got a lot of legs into it. Like we said last week as well, platinum, silver, gold probably has quite a bit more upside. So we think that there is still some opportunity.
I would have never thought that, gold would run at these levels, to these levels. All that glitters is really proving to be gold, Petri. Another metal we don't talk much about, but you did talk about your interest there, is uranium. Base mainly used to fuel nuclear power, and that of course the energy demand really increasing on the back of AI as well. The last time I checked, I think uranium prices pushed to their highest level in 17 months. Take us through that analysis.
So this is we're looking at something now called the Sprott Physical Uranium Trust. So this tracks essentially physical uranium, and as you rightly see, the price is absolutely skyrocketing, right? So the investment case for uranium is very simple. You mentioned it. Data centers, AI, technology is evolving very, very quickly, and the demand for power and energy is just growing exponentially, right? With that. There is the strong green energy push, but we can see even in vehicle manufacturing, it's not really that great. Wind turbines and solar panels are good, but maybe for personal consumption, your house, my house, we can go off grid with a solar panel or two. But for really industrial scale stuff, running a country, running a factory, these things are not really as efficient as it could be. The most efficient energy sources that we have is oil, which generally is relatively inefficient. And then there is uranium, which is a very, very bad rap. But my argument is that if you look at environmental disasters caused by uranium and you compare them to environmental disasters caused by oil, oil's done more damage, I think, in the long run than uranium. But I guess maybe there's just been fewer uranium disasters, who knows?
Yes.
Either way, our view is that uranium is probably the cheapest, most sustainable, renewable source. It's not really renewable, but it's incredibly efficient, right? There's not a lot of uranium in the market. Getting it enriched is trouble, is very difficult as well. So it's a very rare resource. Even if you 100-folded the price of uranium, it would still be by far the cheapest energy source on Earth. Okay, so that's why we think that there's a huge amount of upside in the price of uranium and potential for uranium miners, because there aren't many uranium miners. There aren't.
And that was going to be my next question, if you'd like to get exposure there.
So I've got a list of things here that we can go through.
Let's go through.
So I'm going to give you, one is called Cameco Corporation. All right, we'll go through their charts as well. Cameco Corporation, they're essentially a uranium miner. Oklo is the same thing. So maybe not as good looking chart, but still not necessarily a bad option. Then Uranium Energy Corporation. This is also kind of trading near all-time highs. There's Energy Fuels Incorporated. This is also another uranium miner. So these are like our sort of picks in the mining space. Then in the ETF space, you can look at the Sprott Physical Uranium Trust, which is an ETF that you can buy that tracks essentially the price of uranium. Then there's the Uranium Miners ETF, which is also another Sprott product. And you can see that this chart looks very similar to some of the individual stocks we were looking at a little while ago. And then there's a Global X Uranium ETF as well, which again backs independent, a variety of different uranium miners. So the theory is, or the theorem really is that energy demand will continue to increase. I mean, we've even seen companies like Meta say that they want to build their own nuclear power stations to run the data centers, right? And the source of fuel is very low for these power centers, and we think that that's essentially the next big revolution, if you will.
Is there a way to invest in some of these ETFs on the JSE, or is it just through international markets?
We've looked
I know
at
the
different
stocks probably
angles.
not.
There are some diversified miners that have the
little
smallest,
bit.
like minuscule amounts of exposure to uranium locally. But no, unfortunately, the best way to do it is to go offshore.
Okay.
So we do have a number of different options depending on how our client wants to do it, but these are mostly listed in the US.
All right. Okay then, Petri, we'll have to leave it there. Thank you so much for your time and sharing your insights with us today. That was Herenya Capital's Petri Redelinghuys. And that's all for this week's episode, but stay tuned for lots more coming up right here on Business Day TV.